right. Well, good morning, Apes. Happy Thursday morning. Great to see you guys all here again today. Very excited to get into things with you guys today, but a couple of quick things before we keep going. Obviously, as you guys know, my name is David, one of the lead writers of the Daily Peel here, coming at you live from the Daily Peel Global Headquarters. Location, of course, undisclosed. And we have a lot of stuff to get into here today. Of course, wanted to address a couple of quick housekeeping items first and foremost as well, because it came to our attention yesterday. We had some questions coming in the comments. Me, like I said, I understand computers about as well as George Washington did, so I wasn't able to see those, but thankfully I have a lot of people a lot smarter than me that are helping me out with this kind of stuff. So they should be able to feed me the comments throughout. So if anybody has any questions or anything, feel free to drop them in the chat. We'll try our best to answer them at the very end. Don't feel like you got to limit it to questions, though. If you want to roast me, tell me how wrong my opinions are, feel free to do that as well. I'm always happy to engage and hear how wrong I am. Now, with all that being said, super excited to get into things today. We are about an hour or so into today's trading session. So what we'll be going over right now is, of course, everything that happened yesterday and all the stuff that you're going to want to know for the rest of the day today. So with all that said, I'll be happy to get into it here. So in today's issue, we are going over the Treasury Department's recent auction of the 10-year. Basically, they auctioned off their 10-year notes yesterday. We'll get into it down below tomorrow. All eyes were watching this. It really was the story of the day, even though it is some of the most boring things that I can imagine. Now, of course, we did get some solid earnings reports as well from Roblox and the New York Times. And on the much more fun side, we got some absolute garbage from places like Toast, Warner Brothers. It was really horrific. But we also did get a report from Disney after the close. We'll be writing about that tomorrow. However, we'll be going over it a little bit more in-depthly here today. And then last but not least, we'll go over the AIs that are set to destroy the world down at the very end. We got some new releases this weekend, and so we'll be diving into that and exactly how they can help you do things like cheat on tests and everything else that'll come along with it. But, of course, going over markets a little bit more generally at the beginning here. Equity markets were super boring yesterday. If you just looked at the headline numbers, at least, indexes kind of barely really moved, but it was because there was a lot of underlying action going on. Yesterday was very much a stock picker's market, especially if you were looking at companies that were reporting earnings and things of that nature. However, like we said earlier, treasuries really were the story of the day. It was that 10-year auction that really kind of drove sentiment as well. The stocks are going to react to treasury yield. So seeing the changes that came out with that auction was pretty interesting and something you definitely want to going to be aware of. Now, moving on down below here, like I said, we do have some Disney earnings. It was looking pretty good. The stock's up, decently big early this morning for a company at least of that size. Now, if we go over and take a look at the report here real quick, I know it's super boring to look at, but just trust me on this one. We'll only be here for a quick second. Now, just to scroll around a little bit, we can see that revenues grew pretty decently for the quarter overall. It was nothing really to write home about necessarily, but it was fairly, a decent quarter and everything. Now, one of the big reasons for that, if I can find it again here, was because of the international performance. So it's been that park segment that's been holding up Disney for quite a while now. And if we go ahead and take a look at the growth in the international segment here, it really was fairly decent. That's actually going to be the expenses. But if we can scroll up and find those revenues for the international parks, let's go ahead and take a look here. We got a decent growth in their operating income here, but it was really their revenue, the top line growth that was seen across parks, 55%. Definitely very solid. People, Disney's got parks in Paris, Hong Kong, China, Japan, all over the world, and pretty much everybody out there is a lot more hyped up on Disney than the Americans are, at least in terms of going to their parks. This is a fairly solid earnings report. Free cash flows grew well over 100%, but a lot of that was due to some shenanigans going on with deferred taxes. That's the kind of stuff that companies can play around with to engage in that trademark scumbaggery that we're so used to seeing here in the American corporate sector. Moving on down below, though, ARM did also have its first quarterly report. It was pretty disgusting, but, can't really blame them too much. There's a lot of different things that go on with cap tables when companies go public that can affect that kind of stuff. So it was a really bad-looking quarter, breaking away from the rest of the semiconductor trade for pretty much all of this year, especially all of today and this week. It was really, quite an interesting divergence to see. Something we'll also very likely get into in tomorrow's edition, so definitely stay tuned for that. Then lastly, Jeff Bezos and Amazon, in their bid to control every waking aspect of your life, they're leaning further into healthcare because getting all the data on your internet browsing wasn't enough for them. They need your health data as well. They want to know exactly what your last surgeries were, what your problems are, because that's going to be easier for them to control, I'm sure. So they're leaning further into healthcare. Each Prime member is getting access to a very cheap kind of Prime subscription offering to their One Medical acquisition that they made last year. So you'll be able to go into One Medical and tell Jeff Bezos all about your latest health problems. I'm super excited to get into that. but much more on the boring side. Let's make Treasury auctions fun here real quick. So, quick explanation, but the way that the US government actually sells treasuries is by doing so through auctions. It's a complicated process, but just to give you the simplified version, basically there's going to be two sides of the equation. It's competitive bids and non-competitive bids. As we can see here, the competitive bids are the ones that are taken seriously. So the Treasury basically takes those and sorts them from the lowest yield, which is of course going to be the highest price, in kind of an ascending order from there, and starts to accept them beginning with that lowest yield. But then it's going to be the highest accepted yield, which is, one of the competitive bids that has the highest accepted yield, that will still, when applied to the non-competitive bids, that'll be able to fill the total amount of money that the Treasury is looking to raise. That's the yield that's going to get applied across the curve. So very complicated process because it's the government. So obviously everything has to be complicated so they can fleece you for your money easier. But either way, Janet Yellen was getting into it here, and the investors were looking at it so much because people have been really worried about demand for US 10 years and especially US debt pretty much all the way across the curve. Now, I certainly don't blame a lot of investors for being like that. Imagine your friend was $1.7 trillion in debt for just this year alone, 30-something trillion dollars in debt in total, and they come out and ask you for a loan. Would you be too excited to give them that money? No, but that's exactly what the Treasury is doing. Thankfully, though, they can print their own money. So it's not like they're ever in too much danger, but the real story of the day was the spread between market rates as well as the actual rate that came in as the highest accepted yield. So market rates at the time were about 4.511%. The highest accepted yield came in at 4.519%. So that's a little bit of a spread. The government had to incentivize people to get in on this buying, which definitely sounds concerning, but it was actually much less of an incentive than we saw during October. October was actually even more than twice as wide as this, and people weren't freaking out as much, but there was a lot more attention paid to this, quite honestly, because nothing else was going on, and investors get bored when they can't make things up to entertain themselves. Now, let's go ahead and take a look at actions in the yield curve here. So this is a very basic, just kind of Excel chart, obviously, with some select yield curve data across it. But as we can see, it's bouncing around I mean, it looks like AMC and GameStop back in the spring of 2021 when all that nonsense was going on. Looks like you put a crackhead in charge of the Treasury, the way that these yields are moving. As you can see here, if we look at the chart a little bit closer, we have basically the reverse of what we're supposed to be seeing. So the 10-year right now is the lowest yield among the select data. That makes absolutely no sense whatsoever because it's below the yields that are longer dated as well as below the yields that are shorter dated. Now, the longer dated an asset is, the higher its yield should be, just given that term premium. It's basically the more amount of time you have before your money gets paid back, the higher risk you're taking on there. So in theory, they should have a higher rate. That is absolutely not what we're seeing, and it's not getting any better, as you guys can see here. The most stable among them is that 3 month, which is also the exact opposite of what's supposed to be going on. The shorter dated yield is the more it's supposed to be reacting to ongoings in the rate market. We've seen the complete opposite in 2023, and it's definitely not getting too much better. Even after the FOMC report where they had that the dovish hold, as well as the jobs report that we got last week, that really started to decline the 10-year Treasury yield. We can see that it's been declining more so than others. So still some shenanigans going on in the Treasury yield curve market, and I'm sure in due time we'll figure out what's going on there. But either way, CME Group is still pricing a 90% chance for rates to be held at the December meeting. We'll see exactly what goes on there, and they are pricing in the first cut in the first half of 2024. So definitely something we'll want to stay tuned to, especially anybody who's looking to buy a home within the next decade, century, or anything else like that. This is something you're definitely going to be paying attention to, unless you want to pay a 10% interest rate on your 30-year mortgage. Moving on down to the more fun stuff here today. We have Roblox earnings because lemonade stands, leaf sucking raid hustles. Kids are rich, basically. That's exactly what's going on. All the young children, I don't know what you guys were doing in third grade. I don't know what I was doing, probably eating glue and snorting crayons or whatever nonsense goes on with that. But kids these days are making money. Thank God we have all those people on Twitter, YouTube, everywhere else annoying the shit out of everybody and promoting side hustles because kids are taking those up as they're making a ton of money and then spending that on Roblox. 55% of their users are under the age of 13 years old. They did see quite the jump in average recurring revenue as well as revenue overall. Now, it was a fairly large jump. The way that Roblox makes money is by actually selling a virtual currency for in-game purchases like skins and all that nonsense called Robux. Really is the only virtual currency that I've ever seen that actually serves a purpose here. Now, you could argue that Bitcoin and Ethereum do, but not as much as Robux. This is easily the most successful and definitely the best shitcoin that you and your friends might want to get in on if they ever did list it like that. Either way, great report from Roblox. It's nice to have rich little kids as your customer base. Moving on down to the New York Times now. Uh, the New York Times, I know a lot of people are going to hate this, but they actually had a very solid quarter. If we go ahead and take a look at net subscribers and ARPU, the Times actually did manage to cross the 10 million subscriber line. They are now easily, far and away, the largest publication or the most subscribed publication in the United States. Not necessarily the largest in circulation, because a lot of newspapers have, different different titles that they circulate and stuff like that. But the New York Times itself is just this one, so they racked up that 10 million. As you can see here, as consumers continue to bundle products, the average revenue per user is going to go down. That just makes sense. You're getting more services for a cheaper cost per each of those services. Definitely makes sense in that sense. When you go over to the news only, this is really what investors love to see. News only subscribers, the ARPU, average revenue per user, has only been increasing. They've been able to fleece more money out of us, probably because they're shoving ads down our throat with all the data they collect. And either way, it worked out. You can either get mad or you can get rich and start buying shares. So they did add 210,000 subscribers to cross that 10 million line. And once again, they are still the largest publication by subscribers in the US. This allowed them to beat earnings, not by too much, but they reported 32 cents a share versus the 29 expected. Moving on down to Toast, this is one of the biggest surprises, at least to me. I don't know about the rest of the market, because every single restaurant I've ever been to seems to be using the Toast product. Now that's much better, at least because I like when they come over to my table with the machine and you can just stick your card in rather than them taking your card away and potentially stealing all of your money. Personally, I don't have any money to steal, but I'm sure that's a concern for a lot of you out there. But either way, this report, it really would have made Gordon Ramsay call the CEO an idiot sandwich. Now, the biggest thing here was that they just really haven't been able to control costs. So Wall Street, was anticipating earnings of about 10 cents per share. But they were actually treated to almost the exact opposite of that, with a 9 cent per share loss. Revenue still looked good, growing 37.3%. ARR was a real key. Average recurring revenue, or annual recurring revenue, of 40%, which is really what venture capitalists or early stage investors would love to see. However, in public markets, more mature companies, that's less of a concern than what you're actually able to deliver on the bottom line. Now, personally, I have a lawsuit going out against my college roommate who told me to buy this stock. So we'll see exactly what happens with that, and I'll keep you guys updated here. But if I go bankrupt before, then you won't see me tomorrow. Moving on down to Warner Brothers Discovery, one of the dumbest business moves in recent history that anybody has ever seen is the destruction of the HBO brand that CEO David Zaslav seems to be embarking on. So everybody knows that HBO recently switched their branding to Max. Can't imagine a possible reason why they would want to do that other than just to show that it's been purchased by another company and it's under new control. Seems very egotistical to me, but either way, HBO was one of the best brands in all of media, and Warner Brothers Discovery went ahead and set it on fire by giving it that Max label. Should we really be surprised then that they missed their subscriber guidance? Most people were expecting them to report about 95.4 million for the quarter. Instead, they reported 95.1 million subscribers. I really just can't say anything here. It seems like a basic mistake that your average freshman sitting in a marketing class would have been able to identify. Really nonsense quarter where the company they were expected to report a loss of 6 cents per share, but instead reported a loss of 17 cents. That's almost 3 times the loss that people were expecting. So really disgusting in that sense. I'm surprised the stock wasn't down more. Moving on down below to our last piece of news for today, and the thing that's potentially going to take over the world and ruin all of our lives here, that's going to be with AI. Grok and Turbo were both released from XAI and OpenAI respectively. I really do hope some of these companies start to change their names, because saying AI is the most annoying thing in the world. It makes you sound like a huge nerd, like the biggest hardo. I don't like it at all. But either way, both of them did release these new chatbot LLM kind of competitors. So Grok's a funny guy. If you start to get to know him a little bit, he'll joke around with you. I think everybody saw that viral tweet about making cocaine. If anybody needs a recipe for cocaine, feel free to just reach out to me. You don't have to ask your LLM. I can definitely help you out with that. However, with Grok, the big thing with it is that it's from XAI, which is both the name of the company, as well as a certain kind of AI. It's called explainable AI. And we didn't get into this in the written portion here, but that's one of kind of the goals of this company as well, is to make that explainable AI. I'm sure you guys have all heard that AI is a black box and everything that comes along with that. You can't see what's going on there. The goal of explainable AI is to show the user exactly how the answer was determined, kind of increase reliability and accuracy from there. Now, I can't speak. I'm way too dumb to be able to speak to the fact if that's true or not. all I would probably go in and ask the AI if it was lying to me, much like an interrogation by the police here. But either way, it was very cool to see, and it's cool to see an AI with some personality to it. ChatGPT, on the other hand, or OpenAI, has released a new version of GPT. We had GPT 3.5, GPT 4, and now we have GPT Turbo. Still only available to paying developers. However, there was some pretty cool updates for it. We tried to summarize them here. And the most important one was the update for information. So the default version of GPT Turbo has info all the way through April 2023. I'm sure they deeply regret that because they're cut off before the September 2021, and I wouldn't want to know all the nonsense that's gone on since then. So I'm sure he's having an identity crisis at this point. But either way, GPT Turbo can now take up to 128,000 tokens. I have absolutely no idea what that means, but according to Sam Altman, who I'm pretty sure is a living, breathing AI bot, that's equivalent to about 300 book pages worth of information. No idea who's putting all that in unless you're going to feed it an entire textbook and have it take tests for you, which actually sounds like a pretty good idea. Probably something I would have done when I was in college. But either way, it's just becoming a better and better tool for cheating. We always love to see that. The AI can now follow instructions a little bit better. ChatGPT was a bit rebellious, didn't really like to do everything that we told him before. However, now, it's allegedly much better than that. I actually tested out this only respond in sentences that rhyme on GPT-4. Did a pretty good job, but the answer didn't exactly make a whole lot of sense. So if I was a paying developer, I would love to be able to see what goes on there. And then finally, everybody knows how annoying it is to go in there and enable the plugins and play around with all that. You never know if you're using the right one. So now it's just automatic. Sam Altman was exactly right that it was extremely annoying before, but he missed the fact that the other extremely annoying thing is all those threads he releases on Twitter telling you guys exactly how much better he is than you. Now, that pretty much sums everything up here for today. I know it was an exciting day, exciting week so far, but our quote of the day comes from none other than Alan Greenspan, basically saying the United States can pay any debt it has because we can always print money to do that. Dangerous words there, Alan, but you are a highly respected chairman of the Federal Reserve and much smarter than me, so I'll go ahead and go with that here. Now, to address some of those questions that came in between yesterday and today, the main one that people kind of seem to be asking about was exactly how we acquire so much of this information. There's a bunch of different great websites out there. One of the ones that I rely on heavily is called FinViz. It basically shows a summary of markets, exactly what's going on, and gives you a line of major news tickers. So you can go ahead in there and take a look at what's going on. The other big ones are sites like TradingView, just to keep track of the technical movements of the day. There's a lot of different ones out there. Koifin is another great one. Quiver Quantitative helps stay on top of a lot of insider trading and all that different kind of stuff. But the biggest one and one of the most helpful, especially way back in the day, was a website called Feedly. You can basically source all these different publications to have a feed all into one location and kind of get all your news from there. And the other last one that I would mention is just Twitter. I would recommend everybody goes in and refines their Twitter, or at least builds one account that's dedicated just to FinTwit. It's an exciting place of nothing but degeneracy and greed and pretty much everything else that we love. So you definitely like it a lot there. That pretty much finishes everything up here for today. Make sure you tune in tomorrow. We'll be here roughly about the same time or so. Looking to go a little bit earlier in the day. Hopefully even get to the point where we can be doing this before the market opens so that you know what's going on before you get slammed and your portfolio starts to get losses right at 9:30. Now, I know mine already has today, just like every other day. So hopefully we'll be keeping our fingers crossed that that only gets better going forward. But for now, I'll just say have a wonderful rest of your day. Certainly have one that's better than mine, and we'll see you guys tomorrow. Bye now.